If you're running a business, one thing you should always keep in the back of your head is an audit. You always want to make sure that your papers and your books are being kept properly and that there's nothing weird going on. There are three main kinds of audits: internal, external, and IRS audits. Today we're going to go over the former and leave the latter for another video. Looking for an easy way to find an accountant for your small business? Head to Ageras.com to receive your 3 free quotes from our large source of trusted accounting professionals. Ageras, finding an accountant has never been easier. An internal audit is an audit that focuses on a company's internal processes and accounting. This audit is necessary to make sure that a company's finances are compliant with the law. This audit is also used to help maintain internal data recording and make sure that all your books are being held accurately. Internal audits are held pretty frequently in most industries. This type of audit is usually used to determine if there are any bottlenecks stopping a company from progressing. Regular internal audits can also assist with finding any fraud or misdoing that is happening in your company that you don't know about. The way an internal audit usually begins is someone higher up in the company, like management, might determine a specific department that might need an audit. After that, an auditor will actually go out to the field and collect any data and see the internal processes firsthand. Once the evaluation is concluded, the auditor will sit down with management and show them their findings. This way they can come up with any solutions to any problems that they found in the field. So what actually happens during an internal audit? During an internal audit, the auditor will observe the department, usually taking notes, collecting documents, and watching the employee behavior. They will also conduct employee interviews to see what they think the problems are in the department. Also, during this interview, the auditor will ask the employees questions that has to do with their jobs, such as any information they need to know for their position, any safety or training issues, and everything along those lines. After an auditor is satisfied with their investigation, they will schedule a time with management to sit down and report their findings. During this meeting, the auditor will go over any strengths and weaknesses they found within the department, as well as recommendations to improve the weaknesses. So who actually performs internal audits? Usually there is an employee that is brought on by the company specifically to run these audits. They are hired under the company and are considered a full-time employee. So that's a lot of the important information about internal audits, but what about external? An external audit is usually an audit performed by an external accountant or accounting firm. This audit results in a verified certification of the internal finances of a business. These certification statements are required for all publicly held companies and could be requested by any shareholders, investors, or lenders that suspect discrepancies in the business. External audits are crucial because it removes any bias from an internal audit and really shows the true state of a company's finances. External audits usually start by hiring an external auditor. This means hiring someone external to the company, so that way there's no bias involved. The auditor will start by collecting and assessing data to get a full understanding of the company's activities. This includes collecting financial statements, accounting records, and verifying that all the accounting is being held up to a high standard. This process includes going through financial statements and recreating them to make sure that they were being created accurately. They will also compare your business to other businesses in the industry to see if there are any major discrepancies or see if anything is being reported incorrectly. At the end of the audit, the auditor will prepare an auditor's report, which pretty much explains all of their findings during their audit. This will include any discrepancies found in the financial report and provide any information on anything that's not being held up to specific standards. So how frequently are external audits being held? Typically, a company won't see more than one external audit per year, and publicly traded companies are legally required to have one annually. So that's a lot of the information about external audits, but there's still one more, the IRS audit. This could easily be the most intimidating and cause the most fear for business owners. However, we're not going to go over the IRS audit in this video. That one will come later on down the line. So I hope this information on internal and external audits was useful to you. If you have any questions about it, please leave them in the comment section below. I'll be more than happy to answer them for you. Also, make sure to give the video a thumbs up, hit the subscribe button and the notification bell so you don't miss any more videos. This has been Brandon from Ageras. Thank you very much for watching.